Welcome everyone to our weekly Forex market analysis call, and this is in preparation for trading for the week of October 30th to November 3rd, 2017. Just a quick disclaimer before we get started. Trading is a risky business, so please be careful with your money, and you do not want to put the money in your trading account that you cannot afford to lose. So just be careful, and if you have questions about your individual investment needs, I recommend you talk to your investment advisor. All right, so let's move on to our chart, to our Forex Factory calendar here at the beginning of the week. We always take a look at our calendar. So in terms of major news coming up, so last week we had talked about, there were two central bank events, Bank of Canada as well as ECB. So ECB, both of them were actually disappointing in the sense that they were bad for the currencies. And essentially with the Bank of Canada, they said they're not going to raise rates, and they will kind of keep an eye on the data. Depending on what kind of data comes out, that's when they will make that decision as to whether they're going to raise rates or not. So that overall, the market took that as a negative. But Bank of Canada had already made that statement, so it shouldn't have been such a big disappointment. But overall, when somebody's raising rates or things like that, that is positive for the currency. And when the central bank says they're not going to raise rates or they're not going to cut back on the monetary policy, that's usually negative for the currency. So that's what we saw with Bank of Canada and Canadian dollar. And in terms of ECB, ECB, the big thing that market was looking for from ECB was cutting back on their asset purchase program. So basically, essentially what ECB said, that they're actually going to extend the ECB, the asset purchase program, even beyond what the original one was for 2018. And they're going to keep reinvesting the proceeds back into. So basically what the ECB central bank does is they buy bonds in the market, and that's how they pump money. That's one of the ways they pump money into the market. So when they buy bonds, when the bonds mature, they reinvest that into buying more bonds, and that creates or keeps a cycle of money flowing in the markets. And that's what they're doing. So overall, they're going to cut back on the amount they spend every month. However, so overall though, it was negative because market was really expecting them to sort of pull back, and they haven't chosen to do that. So that's why we saw euro drop, we saw Canadian dollar drop. As a result, dollar CAD went up. So that's what happened last week. So going into this week here, we have another central bank here, Bank of Japan. So Bank of Japan, this will be interesting because we just had elections, and in Japan, Abe got elected. But so everybody kind of knows Abe's monetary policy, which is loose monetary policy. So they keep pumping money into the economy, and they're going to keep supporting the economy. So here, essentially, we're looking for the same thing. Are they going to continue doing that? And if so, what are their thoughts? What are their thoughts on the economy? And so forth. So overall, if they think the economy is doing well, and they're going to maybe do some cutbacks or not add more money to the economy, that will be positive. If not, it will be negative for Japan. So when something is negative for the currency, so Japan, for example, for Japanese yen, if Japanese yen goes down, that means all the Japanese yen crosses will go up against it. And if Japanese yen strengthens, all the Japanese yen crosses will drop. So that's what we're looking for. So that will be the main event going into the beginning of the week here. And then on Tuesday, we have GDP numbers. GDP numbers are important. So for Canadian dollar here, again, because the central bank is watching these numbers very closely, they will have a big impact. Especially if they miss projections. So that's something to keep in mind here. And then we have consumer confidence number for the US. And we have Bank of Canada, Governor Poloz speaking. Again, because we just had Bank of Canada rate statement last week, this should not have as much of an impact. But anytime there's a central banker speaking, I like to stay out of that currency because you never know what kind of comments will come out, and as a result, how that currency may move. And then we have employment numbers for New Zealand will be important, manufacturing PMI numbers for British pound on Wednesday. And then this is our non-farm payroll week. So we have ADP non-farm employment change that will be important, manufacturing PMI numbers. PMI is a leading indicator, so these are always important. So this will be important for the US. And then crude oil inventories, of course, we have that every week. But on Wednesday, another central bank here, we have FOMC, and the Fed's rate statement. So at this point, the Fed is not expected to raise rates. So lately, we have seen the US dollar, especially with these other central banks sort of kind of stepping back from their game. We have seen the US dollar rise. But going into this FOMC statement, if we hear negative comments, or what market considers negative comments, that could be bad for the US dollar. So essentially, our market was expecting 3 interest rate hikes from the Fed, from the US Fed, and we have seen 2 so far, and we are into crunch time now. We are almost into November here, and market really is looking to see, will there be another interest rate hike? So if there is indication that there will be another interest rate hike, that will be positive for the US dollar. But if they come and say the same thing, they're concerned about the economy or geopolitical issues or something like that, that could be negative for the US dollar. So keep that in mind. And then we have Bank of Canada, Governor Poloz speaking once again. So 2 central banks this week as well. So be careful with that one. And then we have trade balance numbers for Australia. Again, important number. Going into Thursday, we have another central bank here, which will be the most important event for the day. We have Bank of England here. So we have monetary policy summary, bank rate. Again, so here they're projecting that the official bank rate will actually go up. Personally, so with England, so with the UK numbers, we have seen positive UK numbers for the most part. They have been positive, and inflation has been going up, except for the last time where it didn't quite hit the predictions of the forecast. So with this, here they're saying that they are likely to raise the rate. I am not so sure about that, especially with the Brexit being sort of on the table here, negotiations going on at the time. It just puts Bank of England in a difficult position. So normally, when the economy is doing well, inflation's going up, all these numbers are coming out positive, we expect an interest rate hike. So here I will be very careful with this Bank of England official bank rate. So it can go up. If it goes up, then this will be very positive for the British pound, because the numbers have been coming out good for a while here. Now, here they are looking for, so these MPC bank rate votes are very important. So far we have seen that they have not raised rates. So there were 7 of them who did not want to raise rates out of the 9 members. And now they're basically projecting that all 9 will vote for an interest rate hike. So this one will be, I would say, I would stay away from being in the British pound while this comes out, because this is the first time in many, many years that Bank of England will raise rates. If they do, and if they do raise rates, we are expecting a big movement in the market. And if they don't, we'll see the price drop, but the price drop will not be as big as the jump if they do raise rates. So that's sort of where I will leave that. And going further into here, we have unemployment claims, and then Bank of England Governor Carney speaking. Again, this will be very important. Retail sales out of Australia, and then on Friday, big day for the US. We have a biggest event here will be the non-farm employment number. Non-farm payroll numbers are very, very important for the US dollar. So they can move the market quite a bit. So keep that in mind. that this will be a market mover as well. So we have a lot of important data coming out this week. So I would suggest being very, very careful when this data comes out. So we can expect a lot of volatility in the market in this upcoming week. All right, so let's move on to our charts now. Okay, so we will start off with weekly chart here. So with euro, two things are playing into the euro weakness. One is Catalonia wanting independence. So anytime there are political issues in a country, it's bad for the currency. As a result, we have seen euro being a little weak, but together with that, another thing we saw was ECB not cutting back on the asset purchase program. As a result of that, it created this big drop in the euro. So overall, the bias is to the downside because Catalonia issues are still kind of in the forefront. Now, do keep in mind, we have FOMC as well as non-farm payroll numbers, right? So those will create volatility in the market because we're looking at euro US dollar chart. So either news for euro or the US dollar can move this pair. So having, keeping that in mind, our bias is to the downside, but because of those events, things could change. So keep that in mind. So right now I'm looking for price to drop here. The target here would be 1.1450-ish level, which is the bottom of this pin over here. But we could pull back prior to that. So the pullback could be into this. So 1.1680 level would be an important level to watch. If the price goes into that level, we could see a good opportunity or potential opportunity for a short side trade. So I would keep an eye on that. 1.1680 would be an interesting level to watch, but overall the bias is to the downside. 1.1450 would be my target to the downside. Aussie here. Actually, let's do pound. Okay, so for the British pound, we have seen a price drop. So this one has the central bank event coming up. So for the last 4 weeks, we have not seen price go anywhere. This has traded in a range. So as we can see, for the last 4 weeks, this is where price has been trading. So I would trade this as a range-bound market at this point. Again, with the Bank of England news coming out, statement and interest rate. If the statement, if they raise interest rates, I'm expecting this to shoot up. But if they don't raise rates, I'm expecting this to drop. So I'm looking for a range-bound market at this point. So what that means is if the price comes into the bottom here, 1.3020, we're likely to see a bounce to the upside back into the range. Or if price goes into 1.3330 level, then I'm looking for price to drop and come back into the range again. But the Bank of England is likely to break the price out of the range and will either see a drop. So if they raise rates, then I'm expecting the price to go all the way up and then potentially go even higher. So that's what I'm looking at if they raise rates, because that will be quite positive. But if they drop rates, then I'm looking for price to basically break to the downside and go into 128.30 level back into the support or resistance area. So this one, currently it's a range bound market, but either of those scenarios, the breakouts to either side are possible based on what the Bank of England says. Aussie dollar. Aussie is weak. We are looking for a further drop in this one. We could see a pullback into the 77.50 level, and then I'm looking for a drop. So in this type of move, we could see is this. So price pulls back into this previous support and resistance level, which is a very, very nice level, 77.50 level. And then first target would be 75.80. And then beyond that, once we clear that, looking at 74.20 level. So those are the two targets to the downside, biases to the downside in this one. New Zealand dollar, we've had a big drop. So we could see price pull back up. So this one was due to political reasons mainly, and just overall weakness in the New Zealand dollar. So we are into this support and resistance level. Because we are here, we could see price pullback because it has been dropping for the last few weeks. Once we come into these, after a big drop, we usually expect price to pull back. So in this case, the pullback could come into this 69.50 level. So 69.50 level could provide a good opportunity for a potential short. And this is the type of move I would be looking for in the New Zealand US dollar. So my bias is to the downside. A good potential shorting opportunity could show up at 69.50. And a break below 68.20 level here. If the price holds, opens us up to this 66.50 level. So my target is to the downside 66.50 level. But again, with the US dollar, a lot of US dollar data coming out, all the US crosses could do strange things. So just keep that in mind. Okay, so dollar CAD here. Everything that's been going on with dollar CAD, we've seen a big push to the upside because of Bank of Canada statement and just the US dollar strength. So the target for this one is to the upside. I'm looking for a further move to the upside, and the move that I would look for with this one would be potentially a test of this 127.80 level, and then a further move to the upside 1.30 level, and then we are into this strong support and resistance level, and we are likely to see a reaction at that level. So overall bias is to the upside, target at 1.300. Euro pound here. We are bearish on euro pound, so I'm looking for a further move to the downside. In this case, the target would be 86.50 level, back into this pin here. So looking for price to essentially drop further for the last 3 weeks here. We have been seeing price drop. So bias is certainly to the downside. So we could see sort of for this type of a move and looking for price to drop. So Euro pound is bearish. Euro Swiss franc here, nice weekly pin bar in this. So nice weekly pin bar, looking for a further drop in this. The target here would be 1.1480 level. So bias is to the downside in this. Euro has taken quite a hit after the ECB statement there. So overall, Euro bias just for all Euro crosses kind of to the downside because of Euro being so weak. So here we're looking for 1.1480 for Euro Swiss franc. Pound Swiss franc here. This has been bullish. So we had seen this bullish move up, and now we are back into this support and resistance level now. So this is an important support and resistance level. So as you can see, price has reacted multiple times here. This one with the Bank of England rate statement, this could go either way. So for now, when we are into these important support and resistance levels, we see a bounce back usually, because usually there will be sellers at these levels, and we are likely to see the bounce to the downside. But with Bank of England, if they do raise rates, I'm looking for a further move to the upside. In that case, 134.00 will be the target to the upside. If they don't raise rates, in that case, I'm looking for a drop, and 127.70, the bottom here, will be the target in case of a drop. So we'll have to play this by the ear and see what Bank of England does, and accordingly, we will see the market react. But going into the Bank of England rate statement, if the market sentiment turns positive prior to the statement, that will be good for the British pound. So we could see British pound pairs go up. So keep that in mind. Dollar Swiss franc here, big move to the upside with FOMC coming up. So from purely technical perspective, I am looking for a continuation of this to the upside. Now with FOMC, that could create issues for this cross. So because of FOMC, so these are two options. Either we see price sort of go up here. So in this one, from technical perspective, bias is to the upside, and this is the move I would be looking for. Price goes up into 1.0150 level, back into these pins up here. However, if we see negative commentary out of Fed, I'm looking for price to drop back into this 98.35 level, all the way back into this. So those are the two scenarios I'm gonna keep in mind as we are trading this. Okay, so pound CAD, actually we won't do pound CAD. Let's go into our yen crosses here. Yen, we have the bank statement coming up. This, based on the weekly close here, this looks bearish, and I would be looking for price to drop back into 147 level here, back into the support and resistance level. So from purely technical perspective, this looks bearish. Now, both of these crosses, both of these currencies have central bank statements. So keep that in mind as you're trading them, because it could create a big move. Euro, like I mentioned before, Euro overall has been bearish. So looking for another move to the downside here. So in this case, okay, so very, very big bearish engulfing candle. Do keep in mind so this was range bound for a while now, for the last few weeks, and now we are right into the bottom of the range. So we do need to see a break of the range before we can take a trade here. So this is the move that I'm looking for, back into 129.30 level, back down here. But the most important thing here to see will be a break of this level, and then this. So early in the week, we have Bank of Japan coming up. So if the Bank of Japan is negative on their currency, in that case, we are likely to see price do this and potentially even go higher. So for this one as well, with all the central bank statements coming up, we're going to mark an upper level here as well. So my two targets will be, if Bank of Japan is positive, so they're positive on their economy and stuff, which will have Japanese yen go up, which means euro yen will drop, then I'm looking at 129.30. However, if they are kind of negative on their economy and everything else outlook, in that case, I'm looking for price to go up into 134.40 and then potentially even into 136.00 level. So those are the two targets. And this applies to all the Japanese yen crosses, because they all will be like that. So Aussie yen here looking very, very weak. We have a very nice bearish engulfing candle, which means that we're likely to see a move to the downside. So in this case, my target is 85.50-ish level. And then we just need to keep in mind Bank of Japan. So, but just from purely technical perspective, very, very nice bullish, bearish engulfing candle. So I'm looking for a further drop in this. Dollar yen here. Dollar yen, this will be an interesting one to trade, because we have both central banks coming at the moment. As a result of that, this could be very volatile. So be very mindful when we are trading this. So as we were talking about, so here we are into this very, very important support resistance level. Price has tested this level multiple times, hasn't been able to really hold above this level. So this is a critical level for dollar yen. So based on the candle close here, it's a very neutral candle close, neutral to bearish. We do expect sellers to step in here. So based on this, I would be looking for something like this. Price goes up and tests this level and then drops again. The target is 112.80 level. Now, this could completely go out the window as both of the central banks come out. So keep that in mind. All right, so that's it for me. Any questions before we call it a wrap? All right, if not, Gold, 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 gold. Let me do gold. Let's take a look at gold. Oil, gold. Here we go. Gold is looking bearish, but we are coming into the support level. So right now, looking for price to drop into this 1259 area. But it's a big level of support here. So we could do one of these. So price, as we can see, for 1, 2, 3, 4, last 4, 5 weeks, actually, it's been trading in this range. So I'm looking for price to sort of hold that range. And if price comes into 1259.80, I'm looking for a bounce back into the middle of the range. So with a lot of different US crosses, we've seen US dollar have, they've had a nice run over the last couple of weeks. So now it will be time for some adjustments, especially prior to FOMC, so we could see some pullback. So keep that in mind. We may not just continue into that bullish kind of scenario into FOMC. A lot of people will remove their positions ahead of FOMC, which means it will create an opposite move to what we have been seeing. So keep that in mind. So if that happens, if US dollar starts to sell off, then gold is likely to go up. So that's why I'm looking at this 1259.80 level. We could see a bounce up. But if it goes all the way back into this 1305, 0.20 level, we could see a drop. So I'm going to keep this as a range bound trade for now. I don't trade oil, but I do look at it from time to time. Let's take a look. Oil is up. Okay, so oil looks bullish. This is the weekly chart. Looks bullish, so I'm looking for it to go up further into this 55.60 level. It's looking quite bullish. So for the last couple of weeks, it's been bullish, moving up, or last 3 weeks, I should say. So looking for it to go up further into this 55.60 level. All right, so that's all I have. Any other questions? Okay, perfect. So in that case, if there's nothing else, if you guys need to connect with me, look at any of my courses or trade room that I offer, please feel free to check out tradingwithvenus.com. And I have a trade room that we trade every Tuesday to Thursday. And then I have other courses as well that if you're interested, you can go check out. All right, you guys have a wonderful rest of the weekend, and I will see you next week then. And good trading for the week. Bye for now.